Me again. Assignment 5. How is taxation determined and explained? For most people, the thought of about paying taxes make their spine tingle, which everyone knows the income tax are paid to the IRS, the Internal Revenue Service, each year. The process of taxes itself can be confusing to many. There are various factors that affect how your personal income tax as well as how much you end up paying to the government or receiving back as a tax refund. The United States government needs a lot of money in order to function and funds its numerous programs. Americans are becoming more and more aware of how their tax dollars are spent, but many are still intimidated by the complex of the tax process. In a nutshell, individuals are expected to report their yearly income and pay tax accordingly. The money collected from income taxes go towards federal education program, the United States military welfare programs, various agencies such as the EPA and the FDA. Both individuals or companies are required to remit a portion of their income to the federal government on an annual basis. When politics decided that more money is needed for certain programs, they often raise income tax to pay for them. When legislators implement tax laws, the IRS is the federal agency in charge to enforce those tax laws and collect the taxes. The IRS also provides assistance to taxpayers who have questions, concerns, or issues with their tax situations. Due to advancement in technology, many tax preparations and filing services are available online. Income tax brackets and tax rates. The amount of income tax that you owe each year is based on your income level. The United States currently uses a processed income tax system, which means that you make more money you earn, the more money you have to pay. Unfortunately, there are ways you can reduce your income tax liability by using variable tax credits, tax deductions, tax exclusions, and other tax breaks. The majority of individuals are subject to pay-as-you-go system, which means that the income tax is deducted from each paycheck and sent to the IRS. This is also referred to as the withheld tax. If you are self-employed, the IRS expects you to pay income tax on a quarterly basis, typical in installment every 3 months. You will likely to have to file an income tax return, but you should check the IRS filing requirement before you proceed. Most people can simply review their W-2s, wages, and tax statements to determine their annual income, although this can get slightly more complicated if you have worked more than one job during the year. State income tax. State income tax are separate from the federal tax law enforced by the IRS. State taxes are by each individual state government. There is no system that encompasses the separation tax for over 50 states. For this reason, state taxes are various, sometimes greater, based on where you live, shop, invest, work, or conduct business. State taxes can be administered by Department of Revenue, Department of Taxes, State Treasurer, or State Control. Thank you and have a wonderful day. Bye.